going to talk about the latest update to Strobot Trader 11.5 version. If you're using it, please make sure you're up to date with everything. So I'm going to talk about things like stop losses and multi-trading and going safe, etc. So start off with GBP. So let's talk about the stop loss first because it's really easy to do. So we're going to look at a few trades. So these hollow candles, of course, are our entries. And so in the case of this trade here, for instance, on this candle, our stop would be there. Okay, it's calculated 2 pips minus the low of the lowest of these 3 candles. So and that would mean that we'd have a target of here, and it would go that way. Fine. Okay, this one is more interesting. So here, okay, it would calculate the stop there, and then it would not take the trade because the distance on that candle between there and there means the risk reward is not right, which is fine because actually it was a fake anyway. So on this one, for instance, we've got a nice tiny stop there, 23 pips, and we go straight to target. Okay, so you can see that that really makes life quite easy, and that's how the stops will be calculated from now on. And the second thing I'm going to talk about is multi-trading. So what we have is, this is a trade that went on some time ago. So as a structure, you can see that when we enter a trade, there's our stop. In fact, our stop will now be here. In fact, yeah, the stop would be down here. So it might not have taken it, depends on the risk reward. Stop would be down here. Okay. The price did actually come all the way down. So the stop would be here. The price does come down, but it never gets anywhere near there. So it means our stops are nice and safe. And the price did actually come up to here, which means that it would have gone safe because, which I'll do in a minute. So, but first of all, what would happen now is that the robot would also place 2 more trades, one here and one here, both with 23 pip stops. Both trades go safe at 10 pips, and they're just additional bonuses. So as it goes up, it just makes more profit. Once they've committed to going that far up, then we'll be laughing. Of course, the existing trade goes safe when it hits the 23 pip level. That's 23% fib level. Sorry. When it hits the 50% fib level, the trade is then moved to 23. When it hits the 78.6, the trade is then moved to the 50, and then we're at our target. And that's the way that works in gradually building trades. So when we add these 2 trades on, they're just their stop orders, sorry. And what will happen is that as they get taken up, it just adds to the profits in there. Once the market's committed to going, this is a better example here. Once the market is committed to going here and heading towards our target, we actually trap trades as well. So you're going to be seeing some nice profits out of that. With a lot less risk. Okay, so in some trades there'll be more risk, in some other trades there'll be less risk, but what I've generally found is once they've committed to going, like here, if you have your stop there, it's not going to get stopped out wherever you enter on that candle, and provided you have the right risk reward in place, you can take the trade. So that's cool. You'll see that though at the moment, you'll notice that all the arrows on this pair are actually are not hollow, and that's basically because of the ATR being a bit too low for it to take the trades anyway. So because it's in a flat market, we're trying to avoid flat markets if we can. Flip through a few more charts, you can see that we've got loads of them. So here's another example. Look at all these going up arrows. Okay, you obviously not going to take all those trades, but if you say looked at taking this one with a target of here, from there would be your stop, that would be your target, and so it wouldn't actually get anywhere near the stop. However, it might not take it because of the risk reward. Same with here, there's your stop, it doesn't ever come back there. This one here you definitely wouldn't take, that's far too much risk. That one there you would take, and you've got lots of space for your stop. So if you enter it kind of there, it doesn't really matter, it's never going to get back to that stop there. And these are not big stops actually, they look like big stops, but they're probably not. So in this case, if we were to take that trade, it's only like 23 pip stop. Okay, so we're kind of sorted. That's kind of cool. Okay, now again with this pair, its ATR is still a little bit low. We're not getting a huge amount of trades because the ATR is too low on most of the pairs at the moment. So we need to be look at this one. There's an entry here. You can see the ATR is up. The stop's actually going to be back here. So it's going to be a tiny stop. Does it hit the target? Yes, it does. Okay. So it's a bit more trade filtering. So again, there's a short there. See the hollow candle. The entry would be, the stop would be there. So wherever you enter it here, it can come all this way back or whatever, and it will head for that target. Some of our stops are going to be quite small, which is fine. But looking for some really nice trades. I mean, this is, again, you've got one here. Look at this chappy. Okay, they're actually, the target is there. So your entry is actually on this candle. Now, it might be somewhere in that wick, hopefully. But if you actually, this is the problem with charts, is that you can look at something and it looks like a huge move, but it's actually not. Where is the stop? The stop is 84 pips, but the take profit is 230 pips. So actually, you could take that trade, and actually it was a really good trade. Look at it, actually goes straight to target. So we've got variable stops. Some of you used to, we were on fixed stops originally, but I've just decided we need to give some of these babies more room to go. Because if we're right, if my trading plan is right about a pair, which they are, it seems these hollow candles are right, we need to let them run. Okay, and what's happening at the moment is we're stopping out too quickly, we're going safe too quickly, and as a result, looking at the testing, as a result, we're getting out of trades before we should, and not taking as much profit as we should. And we want to take profit, don't we? So look at this. So this is an entry there that you can see it's going to have more space. What is this? GBP New Zealand. Sterling always needs more space anyway to run. Okay, and this will give us the space to get bigger pippies. We love our pippies. I used to call this pippies. Yeah. So New Zealand dollar, US dollar. Here's a typical pair. Let's scrunch it up so you can see it. Even when we've got, so there, our stop is back here. Here, our stop is back here. Here our stop is back here. So more often than not, we're going to be taking profit. If the pair doesn't need so much of a big stop, it can just have a small stop. So here I'll stop. This one might have stopped out in profit. It just depends on where in the candle we enter. Remember, using our market scanner. Bam! This is the worst trade ever. This is an Aussie New Zealand trade. Actually, we've been on, and it's just been in this trade for about 3 days. 3 days. 3 days. This pair has not moved. Okay, literally hasn't. Look at this. Okay, so we've been in since. Let me actually. Can I? Aussie New Zealand. Let's just pull it up here. Aussie New Zealand. So we've been. There's our trade. So we opened the trade. We came in on this candle here. You can see that, and it's just sat there very slowly. Technically, actually, the stop would be below this candle, so it'd actually be a bit lower. So technically, it would be sort of down here. I can't do that. The market's so sharp. But it is going up. It's filling in with our trading plan. It's just so slow. Okay, it's so slow. It hasn't got a huge target. So, but that's okay. So, yeah. So a lot of changes have happened. But I think you'll agree that they make kind of sense. And we should be looking at some really nice trades. I mean, if you look at this entry. So, there's an entry on that candle. Stops here. Take profit is there. It does actually get to it eventually. Look, yeah, it just takes ages to do it because this pair doesn't move much. The ATR is really low, so yeah, that's a bit of a pain. It was just at this moment the ATR was high, but you can see the ATR is high at this point, so that's really cool. And then you would actually achieve your target here, although it does faff around and pull back. And I think if I put the properties and I'll put it on show period separators, we actually see that this candle here, there's a gap on that candle, and it's actually not, it's actually in the middle of the week, which is kind of weird, because normally you don't, it's unlikely to get gaps during the middle of the week unless there is a piece of news which moves things. Normally, you know, you can see that it goes up, we get our entry probably Tuesday, down it comes, and we actually take profit on or we close our trading profit on Friday evening. So cool. Yeah, so there's lots of cool things in the robot. I'm looking at some very interesting things about stop loss and things like that I've just got to get through. So there'll be a few more changes, but they'll just be tiny things, I think, for now, and then there is another project ongoing. So if you're interested in this piece of software and the robot and everything like that, Market Scanner is now free on the MetaTrader market. You could go to strobotultimate.com, and there's no links there. Is there links there? There may be links there. If not, join the Discord group. You can find Market Scanner, and the RATR software as well is free. So that's really cool. So just go to strobotultimate.com. Have a really lovely day. It's Saturday, so I'm chilling out watching films. Thanks very much. Bye.